Good evening, Dan Fitzpatrick here, stockmarketmentor.com. By the way, we're in the process of letting people know about a class that I'm teaching on June 4th. It's next week, June 4th. And frankly, it's all about making money. Literally, like the things that I look at to find the right stock at the right time. There's a lot more to trading than that. But I believe in specializing in what we teach. And so this course is literally how to get that right stock at that right time to make a gang of money, period. So I want you to join me for that. It doesn't cost you anything. You just have to be a member. And so if you're not a member, sign up for the free trial. Go ahead and hoodwink me if you want. If you're thinking, well, I don't care about being a member of Stock Market Mentor, but I do want to get that course, fine. As long as you haven't been a trial member before, sign up for the free trial. Go ahead and cancel right afterwards. I don't care. I just want you there. All right. So anyway, with that out of the way, let me just mention this. I'm looking at DraftKings, and this is my biggest position. But I'm trading it I'm trading it typically a little larger than I would usually do if it was just stock. But what I'm doing is I'm trading it with calls and puts as well as stock. And so I just want to explain how I'm doing this. The implied volatility in this stuff is actually, it's pretty high. The options are really, really expensive. The implied volatility is 92%. That's kind of high. And so what that means is options are super expensive. The stock broke out today on heavier than average volume, and that's the average volume over these past several, it's over the last 20 days, but for crying out loud, look at the way the volume has been over the last 20 days. It's really dragged this average up. So the fact that we're back up above the 20-day moving average of volume on this kind of move is really, really impressive. Like, this is really impressive. And so, but it's kind of risky to buy here. Okay, I added to my position today. I bought some of this stuff, but this is how I did it. I bought the stock, and then I sold some out of the money calls to bring in extra money. For example, I can sell, I can sell the $40 calls, which are, clear up here. I can sell the $40 calls for $1.15. Okay, so that takes, the stock's at less than $35, and so I'm obligating myself to sell the stock to $40 if the stock hits that price. Of course, if it doesn't, I'd love to sell it at 40, but I won't be forced to because the stock's lower. So if it goes above 40, I have to sell it at 40, but I got paid $1.15 for taking on that obligation, $1.15 per share. Oh, but wait, there's more. So I also decided, you know what, if this stock pulls back, anything could happen, but if it pulls back, I'd be fine obligating myself to buy some more stock at, say, $30. And so what do? I sell puts at $30. So I'm obligated to sell the stock at $40. I'm obligated to buy the stock back at $30. And what do I get for that? I get about $1.45, or we'll say it's $1.50. So I get $1.50 for obligating myself to buy the stock down here, and I get another $1.15 for this. So that's $2.65. I'm getting paid $2.65 a share, and in return, I have to sell the stock at 40 and buy it at $30. With that kind of a hedge, I can make really good money and sleep pretty well at night, because if the stock pulls back, well, I know I'm going to get to keep the money on the calls. If the stock runs higher, I know I'm going to get to keep the money on the puts. If the stock stays the same, that's okay too, because I'm making money on the elapse of time in the $40 calls and the $30 puts. So you can make this type of trade all the time on all kinds of stocks that are trending higher. It's called a covered strangle, and it's one of the things that I specialize in my option trades at Option Market Mentor. So anyway, I just wanted to give you the heads up on DraftKings. I really like the way the stock's trading. It's not the typical break out of consolidation. This is just a really strong uptrending stock, and who knows how high it's going to go. Might go to 35 bucks and crap out, or it might go to 55 bucks. I don't know, but as long as this trend is intact, I'm good to go, all right? So, and by the way, if you're not a member, again, don't forget to sign up because I want you at that class that I'm teaching next week.